All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. We saw something very different here in the pre-market today than what we have been seeing over the last little while, and it led me to make some of the comments that I made this morning. In the first big difference that we saw this morning was the fact that S&P futures overnight were not as volatile, right? That we were not looking at 20-point drops and 20-point pops. Yeah, they were up 20 points, but it was a gentle, more stable rise. The dips were 7 to 8 points rather than 20 to 25 points. So it was a very different, pre-market setup there, for things. And why is that important? Well, a lot of times what we see in the overnight futures market in terms of the volatility is the same type of volatility we're going to get that day. So if S&P futures markets are incredibly flat, we're probably going to see a pretty flat market the next day in terms of the volatility, right? Wherever it opens, it just doesn't move a whole lot off of that level. And last night, this was one of the more gentle, flatter types of nights that we have seen, which bodes well for the bulls, right? Which definitely bodes well for the bulls. The other thing that we saw that was very different here in the pre-market was the fact that bonds were down. Bonds fell. That's a big difference. We haven't seen that very often, right? In fact, if we come to a daily chart here on the TLT, we haven't seen that in quite some time, right? Yeah, we've had days where they've fallen, but a gap down on bonds, that has not, it's only happened one time, and it was bought up very quickly, but it's only happened one time this entire month where we've woken up and bonds were lower. And that's a big difference. That's a big change here. Two things, and led me to make my comment this morning that on the open I was buying some VXX puts, and it is something that I did do. I did go jump into some VXX puts. We'll see what happens. You know how I trade these. I'm not sitting there with a hard stop and all this type of fancy stuff. No, it's just one of those where this is what I see. We have a generally more stable market overnight, so we're probably going to have a little more stability here throughout the day. I still expect that we will have a few swings up and down and all around, but it's going to be one where, barring some sort of left field type of news, path of least resistance is going to be a little bit lower there. So, very different pre-market. Now, does that mean, hey, the bulls are in charge and off the market goes to new highs? No, not necessarily, right? But, today, like any other day, we'll be looking for, signs that is coming into play. Okay. All right. Now for the challenge, there are no new signals on the board here this morning, but we do have some potential shaping up here. Visa. This is a very interesting one. This is one me overall, I'm very bullish on, but has a nice little 3-7 crossover on it here today. You can see where the stock is relative to the to the stochastics 39.1. The consolidation risk component is a little high right now. It's a little high. What I'm seeing is basically because it's the morning. If this were the afternoon, it would likely be an entry, but we are seeing a nice little crossover in Visa. We're also seeing one on Micron. Now, this is being driven a little bit by the NVIDIA earnings, right? Which have a nice little positive vibe here to them. But Micron has that nice little 3-7 action. This is one that there were some stocks yesterday I was very surprised, or not yesterday, but Wednesday. I was very surprised we didn't see bearish signals on for the challenge. Micron was one of them, right? It had sold off. It had a nice little bounce. It, basically a lower high and then sells off, gets the downside 3-7 cross. Had most everything I want to see from a visual technical standpoint, but part of the algorithm and what it does is it looks at these types of scenarios in the past for that stock and puts a consolidation risk component on it. And the consolidation risk component was very high. Suggesting that, hey, you know what, the chances of a 2 ATR move to the downside are limited. And it kind of surprised me, right? That's not something visually that I can see from the chart. But Apple was the same thing. Where it had that element of, hey, downside crossover yesterday. This thing's gotta go lower high. Come on, it's got everything to go buy some puts, and no. Not at all. In fact, we're definitely not seeing a downward trend emerge. We're seeing that continued chop. And so, we have Micron with a 3.7 crossover to the upside today that could trigger later today. Apple is just missing the 3.7 upside crossover for some sort of entry here, but is definitely in the ballpark there. And then Bristol Myers does have a little, or did here just recently. It looks like, it's right on the borderline right now, but does have some 3.7 crossover action on it. The consolidation risk component on it's fairly high right now, but we could see that change here if it holds into this afternoon. So we're starting to see some nice little crossover action, more crossovers than what we have seen. Target also has some 3.7 crossover action, but we'll have to see kind of how it shapes up into the close here today to see if these are really indicative of a trend starting to form and a trend ready to go, or if they're just part of the wash that we continue to see out there, the chop up and the chop down and in all of that. So, Microsoft, 3.7 upside crossover could be a bullish trigger. It would need a little bit more of a significant rally today for that to come into play. But you take a look at things like a Disney. It's just not close, right? We're not going to get a 3.7 crossover on it here today, barring some sort of absolutely monster move. And at that point, it's probably more than 2 ATRs. So, Visa, Micron, Apple. Some of the closest there in terms of entries. We don't have any downside 3.7 crossovers in the mix here today on the watch list, and so nothing to evaluate on the downside here to this point. Okay. All right, so that's what we're seeing, in terms of the challenge. So no new entries here this morning, but a few kind of things starting to shape on up. But we are dealing with a market that's in a bit of rally mode here early on this morning. Now, yesterday we talked about, bottom picking, what bottoms tend to look like, and maybe more importantly, what they tend to not look like. We talked about the bullish percent index, and, if we're going to see a rally, we need to see a rally where the bullish percent index actually goes up. So far today, and there's a long way to go, we're not seeing that. No, it's not happening. It's just just kind of chilling there. While yes, there are some interesting components to this rally, we still are not seeing the bullish percent index really participate here. With some of the other things, right? What are some of the other things? Well, we are seeing, the number of stocks moving above 7-day moving averages. That's actually pretty decent this morning. If we pull this up, we have 182, right? A little more rally, we'd probably get this up to 200, 250. But to be kind of this breakaway bullish signal, buy anything because it's all going to go up, we tend to see this jump into that 360 to 420 area, and it's, half of that, right? So it's not quite there. So while we're seeing some movement, we're not seeing that, hey, go buy everything type of action. Number of stocks above the 20-day moving average, we're still only talking about 30% here. So, there's still a lot of, trepidation, in the market. We are not seeing this, we're not seeing a similar element to what we saw right back here. Right. In fact, we're seeing similar elements to what we saw right in here in the middle of May as things kind of chopped around the middle here. Okay. So, big difference in S&P futures overnight. big difference in the bond direction, but not a whole lot of change in many of the other internals out there in the market here today. If we look at the stack on kind of how things are moving or what things are moving, just look at the sector summary. It's a bullish stack. We have technology, industrials, financials, all on the upside. Utilities, real estate, energy being the laggards. That's what you want to see. This is a very bullish stack in terms of sector movement, and so you do have some reasons to be buyers as a bull, but it's not one of those kind of, hey, you know what, everything is overwhelmingly in the bull's favor. So you need some sort of risk reward, right? And the risk reward setup is very easy in this market today. Let's say you just want to go buy some Apple, right? You're bullish. You want to be a buyer of Apple. The risk reward setup is very easy. Give it another hour, right? Give it another hour. Let the first 2 hours of the day shape up. Let Europe start to get into its closing time, right? Maybe even an hour and a half to let Europe fully close. Then you buy Apple with the stop on today's low, right? Which is, for many of these, its entry price or its open price. But it starts to break today's open price. There's trouble, right? And so you can set up a pretty tight risk reward for anything you're pretty bullish on. So Apple would be that type of scenario. Now you still will have gap risk, and gap risk in this market is fairly high. But you want to look. You say, hey, I really want to buy banks here because blah 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 blah. Whatever the reason may be, nice little support. Cheap fundamentals. Bank of America fundamentally. This is a stock that's down 15% in a month, and rightfully so with everything we've seen and the absolute inversion that we've seen come into the bond market. It deserves to get hit. But it's also one of those where it's starting to get into valuation levels that are just incredibly compelling. And so you say, hey, I want in. Right? Where's your stop? Well, today's low. Today's low is the stop area for that. Now, Stock Charts isn't showing it right, but today's low is 26.41 here, so it's not all the way down here to 26.25. Sometimes Stock Charts likes to include in the mornings. It likes to include pre-market data. But it's not. 26.41 is that stop price, so it's a fairly tight stop price. To go after. Let's say you want to be a buyer of a Boeing, for instance, right? Where do you put your stop? You put it on today's low, right? And today's low on Boeing is 326.54. So, this isn't something where I say, hey, the risk or the probability of success is overwhelming in the bull's favor, but it's one where the risk-reward component is very compelling for the bulls. If you're bearish and you want to the downside, you let today's lows break, you use today's highs as your stop point, and you play it that way. And it's a very, very kind of simple setup, simple play, there on the board. Okay, so yes, the bulls have a little bit this morning. No, it's not overwhelmingly compelling from a metric standpoint, but from a risk-reward standpoint, there's some very interesting setups for the bulls off of today's open price or today's lows that I would wait about another 60 to 120 minutes to go after. Why? Because you're going to have the option market calm just a little bit. You're going to have the European markets closing, and so you'll get a little bit better value on your options. Provided the stocks don't surge in that in that time period here. Okay. Alrighty, I'll be back on here with you this afternoon. Hopefully we'll have a signal to get into, so we don't have to go into the weekend in cash. Love to go into the weekend with a couple trades on the board, but we'll see what signals emerge, and if and when they do, we'll go after them aggressively. Thanks for hopping on. Have yourselves a great one. We'll talk to you later. Take care.